while every retail investor was glued to the Fed decision last night, refreshing their charts, watching Bitcoin slip under 70K, something happened that almost nobody covered. A quiet SEC filing. 4 words on a document. Form S4, now public. That filing belongs to Evernorth, the company building $1 billion XRP treasury vehicle, and it changes the game for every single XRP holder watching this right now. Here's what's interesting. The crowd is staring at price. The institutions are staring at that document. And I'm going to show you exactly why those are 2 completely different conversations. Stay with me. Welcome back. I'm glad you're here. As always, nothing in this video is financial advice. Do your own research. What I do here is decode what the data is actually saying, not what the headlines want you to feel. Let's get into it. Let's start with the hard truth that most people completely miss. When you hear the word treasury company, your brain probably goes to something corporate and boring, a business putting cash in a savings account. That's not what this is, not even close. To understand what Evernorth's S4 filing actually means, you need to understand the model that came before it. Look at MicroStrategy, now rebranded as Strategy. They didn't just buy Bitcoin, they built a publicly listed vehicle specifically engineered to give Wall Street regulated exposure to Bitcoin without touching the asset directly. Institutional money poured in, not because they suddenly loved Bitcoin, because the structure was finally there. The compliance box was checked. Then you had Bitcoin MR, Tom Lee's firm, doing the same playbook with Ethereum. Now, watch what's happening with XRP. Evernorth has officially transitioned their S4 filing from confidential to public. That single word, public, is what opens the floodgates. Because now, for the first time, they can go to market. They can list on the NASDAQ. They can raise capital by selling shares to the very institutional players who have been sitting on the sidelines waiting for exactly this moment. Think about that. Not a futures product, not a derivative. A publicly listed equity vehicle sitting on NASDAQ, backed by XRP. That's not retail speculation. That's infrastructure for institutional capital allocation. Here's what retail is getting wrong. They're watching the XRP price chart and asking, why isn't it moving? But the question they should be asking is, who is building the rails right now before the capital arrives? The answer, based on what we're watching in real time, is everyone who understands how money actually moves. Let's do the math, because the math is where it gets uncomfortable for the skeptics. Evernorth's filing positions this as a $1+ billion XRP treasury vehicle out of the gate. But that's just the starting number. That's what they're using to get listed. That's not the ceiling, that's the floor. Now here's where it gets interesting. Strategy, MicroStrategy, currently holds roughly 214,000 Bitcoin. Their market cap has been multiples of their Bitcoin holdings at various points, because the market prices in future accumulation, not just current holdings. If Evernorth executes a similar playbook, the XRP they accumulate through share issuance doesn't just sit there. It gets taken off the open market, permanently, until they sell, which they have every incentive not to do. Now, zoom out. XRP has a fixed supply of 100 billion tokens. But the real liquid supply, what's actually available on exchanges right now, is significantly tighter than that number suggests. Exchange reserves have been trending down. Escrow releases of 1 billion per month are largely relocked, not dumped. And on-chain data from CryptoQuant shows active addresses just hit a 5-week peak of 46,000 on March 16th. Nearly 3 million daily transactions in the last week alone. Tokenized commodities on XRPL have gone from $111 million to $1.14 billion in 2026 alone. That's more than 10x in 1 year, giving XRP over 15% of global tokenized commodities market share. Now think about what happens when you add a publicly listed NASDAQ vehicle that is structurally incentivized to keep buying XRP and taking it off the market into an ecosystem that's already absorbing liquidity at that rate. Here's the math that the crowd ignores. Cross-border payments move $150 trillion annually. The Forex market turns over $7.5 trillion every single day. And the Nostro Vostro system, the correspondent banking network that XRP was literally engineered to replace, has $27 trillion locked in idle capital at any given moment. That's dead money, sitting in accounts, doing nothing, waiting for settlement. If XRP captures even a fraction of that liquidity flow, the price requirement, and I'm going to use the word requirement deliberately, is not what it is today. The math doesn't allow it. This isn't a Moonboy fantasy, it's a design requirement. Ripple's own documentation makes clear that higher XRP prices enable more efficient large value transfers. Higher price, less slippage, less token volume needed per transaction. The system needs the price to rise to function at scale. That's not speculation. Now, let's talk about who else is paying attention, because this is where it gets hard to dismiss. While retail investors are complaining about price action, the institutional signal is getting louder, not quieter. The SEC just approved NASDAQ's plan to introduce tokenized trading for certain securities. We're talking about Russell 1000 stocks and ETFs tracking the S&P 500 and NASDAQ 100, settled as tokenized securities. Not someday, now. The Depository Trust and Clearing Corporation, the DTC, is already involved. The rails for on-chain settlement of traditional equities are being built in real time. Ask yourself this brutal question. Do you think NASDAQ is doing any of this without knowing which blockchain infrastructure is regulatory compliant, battle-tested, and already operating at scale? They don't move without legal certainty. They don't build on sand. Senator Cynthia Lummis gave an update that is the most concrete timeline we've had in months. Her exact words, "We are going to mark it up in April. We're going to mark it up after the Easter recess." That's not a maybe. That's a public commitment. Senate Banking Chair Tim Scott has said the stablecoin yield compromise, the single issue that's been blocking this bill, will be in his hands by end of this week. Think about what that means. The one piece of the puzzle that's been creating regulatory uncertainty is about to get resolved. And when that uncertainty clears, the institutions that have been waiting, the ones who cannot legally allocate without regulatory clarity, those gates open. The FTX creditor distribution is also back on the calendar. $2.2 billion going out to creditors on March 31st. We've seen this historically inject a measurable amount of liquidity back into the crypto ecosystem. That's near-term fuel, hitting a market that is significantly oversold. Fear and Greed Index just hit 18 on the stock side, the lowest since Thanksgiving. Crypto extreme fear at 23. When smart money sees numbers like that, they don't panic, they position. Let me give you the actual timeline as it stands right now. By end of this week, stablecoin yield compromise reaches Senate Banking Chair Tim Scott. That's the unlock event for the Clarity Act's final push. April, post-Easter recess, Senate Banking Committee markup of the Digital Asset Clarity Act begins. Senator Lummis has staked her credibility on this date publicly. This isn't a rumor. This is a scheduled legislative event. March 31st, FTX's fourth creditor distribution, $2.2 billion, hits. Historically, this category of event has preceded measurable crypto market movement. Q2 overall, Evernorth begins raising capital through public share issuance on NASDAQ, using proceeds to purchase XRP at open market prices. Every dollar raised is a dollar of demand pressure on a tightening supply. One senator described the stablecoin compromise as, "Everyone will be a little unhappy." That's the definition of a real deal. When everyone gives something up, it means it actually passes. A lopsided deal dies in committee. A compromise gets 60 votes. Senator Lummis put it plainly, Bipartisan, 60-plus votes, floor time already being arranged with Senator Thune. We are not talking about 2027 anymore. We are talking about a window that is measured in weeks, not years. The fuse is lit. The only question is whether you're watching. Here's what I need you to internalize. The window where retail has the same entry point as institutional capital is always, always shorter than people believe. Right now, fear is high, price is flat, and the crowd is confused. That combination has historically been the setup, not the warning sign. When the Clarity Act passes, not if, when, every financial institution that's been sitting behind a compliance wall gets clearance to move. When Evernorth is fully listed and raising capital, that demand hits an already tight supply curve. When tokenized security settlement moves on-chain at scale, XRP's position as the de facto bridge asset becomes structural, not speculative. At that point, the price of entry will not look like today's price. The math will make sure of that. So here's what we know. Evernorth's S4 is public. The NASDAQ tokenization infrastructure is being built right now. The Clarity Act has a markup date in April and a stablecoin compromise closing in by the end of this week. FTX creditors get $2.2 billion on March 31st. And on-chain XRP metrics, wallets, transactions, AMM pools, tokenized commodities, are all at or near all-time highs. The crowd sees red candles and feels fear. The informed see a structure that is almost complete. I'm not here to hype you. I'm here to show you what the data actually says. The rest is up to you. If you made it this far, comment structure below. I want to know who's actually reading the signals and not just the noise. If you found this useful, hit the like button and subscribe. This channel exists for the people who are paying attention when the room is quiet. In a market driven by emotion, composure is the edge. Stay patient, stay rational, stay positioned.